Hello, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 19th, 2025, and we are diving deep into Alphabet, ticker symbol Google. There is a seismic amount of news to cover, so let's start there before we hit the charts. The biggest headline by far is the revelation that Berkshire Hathaway has taken a massive $4.9 billion stake in Alphabet. This is a significant vote of confidence from a firm that traditionally avoids large tech bets, and the market has responded emphatically. This news is compounded by bullish analyst moves, such as Loop Capital raising its price target to $320 following strong Q3 results. Alphabet's growth narrative is being heavily reinforced by progress in its AI and cloud sectors, specifically the Gemini 3 rollout and Waymo's advancements. However, it's not all one-sided. There are whispers of caution, with Alphabet's own CEO reportedly warning about a potential AI bubble. The sheer volume of news, with over 320 articles this week compared to a weekly average of 38, tells us that all eyes are on this stock right now. Now, let's see how this explosive news translated to the price action on our daily chart. We can see a clear, powerful uptrend that has been in place for months, but the real story is what happened 2 days ago on November 17th. Let's zoom in on these last few candles to really see the impact. On Friday, November 14th, the stock closed at $276.41. Then on Monday the 17th, following the Berkshire news, Google gapped up massively, opening at $285.77 and rallying to a new all-time high of $293.95. This created a significant price gap, a zone between roughly $276.50 and $283.50 that is now a major area of support. However, yesterday, November 18th, we saw a pullback. The stock opened at $287.91, tried to push higher, but ultimately sold off, closing down at $284.28 on very high volume. This suggests some significant profit-taking after the enormous run-up, which is perfectly normal. The key question now is whether this is just a healthy consolidation or the start of a move to fill that massive gap. The high of that day, $293.95, is now the key resistance level to beat for bulls. On the downside, yesterday's low of $278.20 is our immediate short-term support. Let's switch to the 1-hour chart to get a more granular view of the recent price action. Here we can see the incredible surge on the 17th, followed by consolidation near the highs. Yesterday's price action shows a failure to hold above the $288 level, leading to a steady decline throughout the U.S. trading session. The volume was heaviest during the sell-off, confirming the presence of sellers. The price is currently hovering just above the top of that gap we identified on the daily chart. This $283 to $284 area is a critical pivot point for the short term. If buyers can step in here and defend this level, it would be a very bullish sign. However, a sustained break below this zone could see price accelerate downwards towards the lower end of the gap. Now, for an even closer look, let's pull up the 15-minute chart from yesterday's session. We can see the opening drive was quickly rejected, establishing that intraday resistance near $288.80. The sell-off was methodical, forming lower highs and lower lows throughout the day. The price found some temporary support around the $280 mark before a final leg down to the low of $278.20. The session ended with a bounce back towards the middle of the day's range, closing at $284.28. This bounce shows that some buyers were willing to step in at those lower prices, but the intraday trend was clearly bearish. This sets up an interesting battle for today's session between the profit takers and the new wave of buyers inspired by the recent news. Returning to the daily chart for our long-term perspective, the overall structure remains incredibly bullish. The stock has been in a strong uptrend since the lows back in April around $140. The price is well above where it was just a week ago, so the primary trend is not in question. We have a major support area from the recent gap, from $276.50 up to $283.50. Below that, the next significant support would be around the $270 level, which was a consolidation area in late October. The primary resistance is, without a doubt, the new all-time high at $293.95. A break and close above this level on strong volume would signal the next leg up, possibly targeting that $320 analyst price target. So, let's recap the key levels and potential scenarios. Your critical resistance to watch is the all-time high of $293.95. Your most important support zone is the gap, specifically yesterday's low of $278.20 and the top of the gap around $283.50. A bullish scenario, which I see as a 65% probability, involves the price consolidating above $280 and making another attempt to break the $294 resistance in the coming days. This is reinforced by the powerful fundamental news from Berkshire. A bearish scenario, with about a 35% probability, would see the price fail to hold the $278 support. If that happens, a full gap fill down to $276.50 becomes very likely, which would reset the board for the next move. What to look for? Watch the volume. If we see buying volume increase as price holds support, the bullish case strengthens. Conversely, if selling volume picks up on a break below $278, the bearish case becomes more probable. In conclusion, the long-term trend is bullish, but short-term weakness and profit-taking are present. The battle over the recent price gap will likely determine the next major directional move. Please remember, this video is for informational purposes only and does not constitute financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and don't forget to like and subscribe for more content.